All right, folks, are we ready? Let us do this. Let's do this. Let us do this. Welcome, 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 welcome. If you are a registered student, please let me know in the comments section that you're here so I know who you are. Everybody else, you're welcome just to vibe with us tonight. This is a free session. We're excited to have you. We hope you might consider after the free session that it is worth your time to be a part of our community. If not, that is fine. No strings attached. Alrighty, let's do this. Let us do this. Okay. We will do it this way. Put that over there. Change the screen being shared to there. And we are ready. All right, get ready, everybody. Tonight's one of those nights where you might want to take some notes. So tonight's one of those nights where it might benefit you to take some notes. I'm going to be going into some stuff which will, trust me when I say will greatly benefit your career as a trader. Cool. So let's get it started. One quick second. Let's just do something here real quick. Right. Cool. Let's duplicate that. Let's add that. Yep. All right. So, yep, I'm ready now. Cool beans. So welcome everybody. My name is Israel. I am the principal partner of Israel Keys Wealth. It's a community of traders and those learning how to trade. We have an educational slant to what we do. But beyond education, we want to create a collective, a community of individuals who are passionately and successfully engaging the financial markets on a regular basis for profit. Now, if you're new to our channel, we have about almost 65 videos on it now. Of those 65, at least 40 are public. So while we want you to sign up to what we do, shameless plug, for £79.99 a month, Great British pounds a month, you can get access to this real quick. Let's just plug it real quick. Get access to that. Some of it is still in beta development, but hopefully by the end of the year, everything on this screen will be up and running. We have a community of students already who are finding great value and great asset to their trading journey. And we run this kind of schedule. This is what you get for that measly $79.99. In addition to this, you get access to instructors. You get to be part of a community for banter. You get one-on-one input. You get accountability. You get manuals and recorded programs as they come out, and everything that we do is available for you to watch or interact on demand. I don't know of anywhere else in the world that has anywhere near this kind of value. If you find it, let me know. Right, so the Traders Lounge is a new initiative of mine as part of the Israel Keys Wealth Academy. I might be the principal partner, but I'm not the only instructor. I've got a couple of people who I work with. One of them is my partner and my VP, Tokba Opedun, or T Billions, as he is called on the social media space. But the Traders Lounge is really my pet project. It's really my personal brainchild. And I do the Traders podcast as well. I haven't done a Traders podcast in about 4 more months now. Since the lockdown began, I got so busy. But it's not so much a podcast where I come to you and we have a conversation about something to do with trading per se. It is sub-themed things I learned along the way. It's my way of creating what I call a freedom path. Good to see everybody. Good to see Monica, Esther, Kiran, Jared, everybody. A freedom path to me is when a person takes advantage of their own journey to success or freedom in a thing and makes it easier for those coming behind them to get to where they've gotten to a lot quicker. So on the Traders Lounge, I'm going to be sharing with you not just objective concepts, but practical things that I discovered along the way. That's why I called it things I learned along the way in my trading journey, in the process of losing, between losses and tuition, well over 35 grand in pounds. And if you add all our instructors at Israel Keys Wealth Academy, we've almost pushed 50,000 in tuition and losses. So these have been painful lessons, but we're hoping that our pain can be your gain. And so today I want to talk about some keys to finding consistency in your trading. I'm not going to be looking at a chart today, and that's intentional. Usually I like to write on the charts because I want you to get used to seeing trading charts. But because of the nature of what I want to talk about today, I don't want you looking at a chart. I want you to be able to process this information without the distraction of a chart. So there are 5 things I want to share with you today. I'm going to run through them with you real quick at the start to give you the 411. I'm going to list them in order, and then I'm going to go back and break each of them down one by one. Guys, just let me know that you can hear me loud and clear. For Monica's ouch comment, I'm assuming that means you can hear me loud and clear. Good stuff. So here are the 5 things that I could easily have come up with 50. But for this evening, going into the new week, there's 5 I want you to look at real quick. Number 1 is focus on habits, not results. Now, let me warn you in advance. Some of these keys are going to sound extremely counterintuitive. They're not going to make sense to you. Well, I take that back, but they may not follow the natural cadence in which you would have thought. But the more you chew on them and the more you imbibe them into your trading journey, you will come back and thank me. And hopefully you're thanking me with Bentleys and yachts because you're making all the money in the world and you're saying thank you for being there at the start of my journey. Or just a measly house here or there, in Bel Air, Beverly Hills. And I'm only half joking, by the way. But seriously, they will save your life. So focus on habits, not results. Number 2 is kill the drive of greed and replace it with fulfillment. Sorry, if you know me well, you know that looking at that is annoying me. So let me just fix that real quick. I cannot stand writing incorrectly. So good. Excellent. Sweet. There we go. So kill the drive of greed and replace it with fulfillment. Number 3, develop a consistent approach to the market. You cannot be consistent. Oh, you lost the sound? Is it back? Okay. You cannot be consistent or you cannot achieve consistency. You can arrive at consistency if you yourself are not consistent in your approach. Number 4 is have a life away from the markets. This is so important. If you're trading simply because, if trading is your sense of ultimate fulfillment in life, if you're addicted to it, if you can't do without it, if you get your feedback and validation from the markets, you will have a long and painful career. Well, a short, sorry, and painful career. And finally, treat it as a career. Right? It's a long haul. Approach it like you would approach medicine or engineering. Plan for it to be 20, 30, 40, 50 years, and don't try and get there overnight. Okay, so let's go back and deal with them one by one. Focus on habits, not results. I'm tempted to show you some charts now, but I won't. If you have been a part of our program, either watching our free videos on YouTube or you're part of our paid registered student group, you will realize that one of the things that I have been harping on over and over again is about habits. We tell you when to trade and when not to trade, or we ask you, we give you choices. These are the best times, choose one. What time frame to trade? What scenarios you like? What entry patterns go well with you? Trading is like riding a bike. If you focus on staying upright, you will fall. If you focus on the rhythm of cycling, you'll find yourself staying upright. Too many traders, and oh, by the way, I'm going to be adjusting this as we go along. So I'm going to be adjusting the slides as we go along. Or should I say editing the slides as we go along? There we go. Too many traders have no habits or very bad ones. And if you bring a lie detector to this, it will beep and tell you no lies detected. The first Traders Lounge we did, at the time we didn't call it the Traders Lounge. It was after that first session we did on psychology that I thought about naming it the Traders Lounge. I told you the trading changed my life. And one of the things it did was, by nature, I am a very disorderly person. I got to be honest with you. I've got almost compulsive OCD in some areas of my life. Like I can't write and not capitalize correctly. But by and large, I like to go with the flow. I'm an extremely spontaneous person. I am just, I don't know how to explain it. I just love to be spontaneous. Absolutely love to be spontaneous. In essence, I like to do different things, different days. I don't like, if I drive somewhere on a daily basis, I'll find 5 or 6 different routes to get there because I get bored driving one route over and over again. Honey, boo, bae, boo boo, ray ray, hear me. That is a disaster as a trader. The first key to success, consistency, and by the way, let me define consistency. Consistency means that you don't make a huge profit this week and a huge loss the next week. You're not up and down. You're not profitable then losing. It means at whatever level of success you can bank over a short space of time, you can predict how well you will do. You are consistently hitting a successful threshold over and over and over again. Now, you want to improve that threshold, but you have a a dependable floor. We know that you will make a minimum of this percent equity or this amount of profit over so often. You can predict with some consistency your success. It means you're not gambling. In fact, let me go back and address that real quick. We should definitely have started out by defining what we mean by success, by consistency. So let's define that. Consistency, when we say consistency, we mean, one, being able to predict with some accuracy a minimum threshold of success, whatever you define success as. Number two, it means you are not hoping to succeed. You have a clear, and what's what I'm looking for now? Sustainable. So you have a clear and sustainable edge in the markets. 3, you are even keeled in your results and not prone to wild swings of profit versus drawdown. In essence, your equity is going up steadily as a curve. You don't make 20% this month and then next month you're down 50. Also, one of the reasons why consistency is so important to hit early. You can improve what your consistency is, but one of the main reasons it's so important to hit a threshold of some level of consistency early is anything less will drain you emotionally and damage your approach to the markets. So, if you are not confident in and of yourself, that you know what you're doing, and you can expect a minimum threshold of results, you're going to be up, down, up, down, up, down. It will amplify the pain, pleasure, and fear, greed cycles. In essence, everything the market does will amplify your emotions. When you see your trade winning, you'll be too excited. When you see it losing, you'll be too afraid. You will literally suffer what I call traders bipolar. And I am not making fun of mental health, right? I have had my struggles with it. But you do not want to be that individual who is up, down, up, down, up, down, up, down. It will damage you emotionally. It will affect the other areas of your life. And it will make your trading more, or it will bring some disaster to your trading. Avoid the emotional treadmill and stay away from traders bipolar syndrome, where you go from being extremely excited to extremely sad several times a day or week, simply based on what the markets are doing. You want to be able to have a clear expectation of what you can get or will most likely get today, this week, this month, this year. And it sets a balance to you emotionally that you can approach the markets from. All right, so now that we've addressed that, too many traders have no habits, are very bad ones. If I were to ask you what your trading habits are, many of you wouldn't be able to tell me. Now, that's a recipe for disaster. And when I say habits, I mean clear, definable, and repeated action stroke attitudes to a thing. Habits usually, that's what I'm looking for now. Habits usually are birthed from a philosophy and or paradigm of life or a certain part of it. In essence, what you believe and how you approach stuff based on what you believe, to a large degree, will determine your habits. This is the reason why when you start training with us at Israel Keys Wealth Academy, the first thing we want to show you is our philosophy to the markets. Before we show you every single technical element of it, and for those of you who've come on board recently, you remember we'll have had, especially if you've traded before. If you're a brand new trader, we don't need to have this conversation because you don't have any bad habits we need to correct. But if you've traded before, you're usually going to come in with horrible habits, except you were trained by someone who shares our philosophy. And so we want to tell you in advance, this is the way we approach the markets. This is the lens through which we see the financial markets. Because you cannot develop habits outside the lens of your philosophy and your paradigm. And the philosophy or paradigm you have of the financial markets, and especially of the foreign exchange market and how to trade it, will determine the habits you form. That's why we tell you, stay away from a live account for at least 6 months. We don't care how much money you make. We don't care how many trades you win in the beginning. We are more concerned with developing clear, definable, and repeated actions and attitudes. I will trade at this time on this days with these pairs, looking for these setups. When I wake up in the morning, I'm going to brush my teeth, go for a jog, and then come and sit down in front of my computer. Very important, because the human brain is wired in something psychologists call, one second, let's go back, habit loops. Profound. The human brain is wired to enter and sustain habit loops. A habit loop is a strange thing. Let me give you an example of what a habit loop is. If you drive a specific route to work every day, let's assume this is the way you go to work or go back home from work. And one day you're leaving your house to go somewhere that's not work, or you're coming from work and you plan to stop off at somewhere. Let me know you guys are following me in the comment section, and you plan to stop off at somewhere that is not your house. Hands up in the comment section, this has happened to you before. You start driving, and because the first part of this journey is identical to your work route, your brain goes into autopilot and you end up outside your office or your workplace when you should have been going somewhere else. Or if you're coming from work and you plan to stop off at a friend's house, a church, or a pub or whatever, you end up outside your house and think, snap, I was planning to go there, not here. Because your brain has developed a habit loop. A habit loop is how your brain keeps sane. This is how the human mind keeps itself sane. When something is repeated over and over and over again, your brain develops a cadence in which it associates certain triggers with certain responses. In essence, if this happens, I will do this. If I see this, I will feel this way. This is how addictions are formed. If you used alcohol or opioids to deal with feeling pain or anxious in a season of your life, eventually your brain says, every time you feel pain or anxiety, reach for that drug or that bottle. It becomes an addiction because your brain has now linked anxiety or pain with substance abuse. It's how parents develop bonds with their children. Your brain says when you wake up in the morning and you hear your child cry, feed them or change their nappy. For the rest of your life, your brain has now been wired to say when this little human being who ends up becoming a big human being needs something, I must move immediately. This is why parents have 40-year-olds who are dependent on them and cannot cut them off for their own benefit, because that mom or that dad is now in a habit loop of intervening every time that child cries or needs something. Habit loops are not all bad. There are some extremely good habit loops. And as a trader, you want to start early developing positive habit loops. When I see that in the chart, I will do this. At this time of the day, I'm looking for that. Even as simple as before I sit down, I go for a run. Whatever it is, give your brain a clear set of technical and behavioral habits. Technical means price action habits. Behavioral means things you do in your life. When, how do you trade? What pairs do you trade? What time of the day? What days of the week? What patterns? What entries? What strategies? What filters? What philosophies? What signals? What time frames? What do you do before you trade? What do you do after you trade? What time of the day? So one of the reasons why we developed this is we're trying to get you into a pattern. Say, okay, at these days of the week, at these times, now we tell you you don't have to be at all of them. They'll all be recorded for you to watch later. But notice it's the same time in the morning and the same time in the evening every single day. There's a reason for that. We're trying to get your brain into a habit loop. And you notice that the morning time is just in between the London and the New York sessions. That was not by accident. 11 a.m. is not the most convenient time for me or the other instructors. But we want you to get into the habit of looking at a screen at 11 and then move up or down. 6 to 10, 12 to 3. We also want you to get in the habit of, in the evening, after the trading day is done, reviewing what has happened and getting ready for the next one. If you focus on results, 1 second, let's duplicate the slide. Focusing on results instead of habits creates a dysfunctional cadence of the end. You've probably heard this before. Justifies the means. And this applies not just to financial trading, but every aspect of your life. If you are an end justifies the means person, you will be dysfunctional, you will be a schizophrenic, you will lack authenticity, you will lack integrity, because all you care about is how things turn out. You will be a chameleon in your approach. People will not be able to trust you. You will not be able to trust yourself. And you will very, very seldom do these kind of people find lasting success. However, if you focus on on your habits, consistent habits will breed consistent results. Sorry, Kieran. Well, hey. Oh, snap. You guys can't see my screen. My bad. I didn't realize I was stuck on that. Sorry. Consistent habits will breed consistent results. If you do things a certain kind of way, you will end up with a certain kind of result. It may be a wrong result, but at least you can check it. You can, what's what I'm looking for now? You can measure your results by consistent yardstick. So I'm going to come back to this in number 3. Let's put that down in the notes. Okay, so I am going to leave that there. Let's come to number 2. And for many of you, this is going to be the hard one. Because, and rightfully so, let's make this clear. If you want to learn to trade just for the sake of being able to predict what happens on the chart, please stop now. Because the primary reason you want to learn to trade is to develop a skill that will give you financial benefit. We learn to trade to develop a skill with a financial benefit. Simple. And if you're doing it for any other reason, you're deceiving yourself or wasting your time. So there is nothing wrong with wanting to make money. However, there is a difference between a desire to make money and greed. AKA, this is what I call fulfillment versus greed. And to really drive this home, I want to show you the definition of these two words. Let's see. This is what Mr. Google has to say. And let's blow Mr. Google up so we can see him clearly. Fulfillment is the achievement of something desired, promised, or predicted. It's the meeting of a requirement, condition, or need. That's fulfillment. Let's look at greed. This is fun. Greed is an intense or selfish desire for something, especially wealth, power, or food. I like the fact that they put food there. Now, the Merriam-Webster dictionary defines it as a selfish. Let's look at this now. I like the Merriam-Webster. A selfish and excessive desire for more of something than is needed. You know what? I love that so much. I'm going to put that in my PowerPoint. This is greed versus fulfillment. These principles aren't just tied to trading, they're tied to success in any area of your life. All right. So, greed, according to the Merriam-Webster Dictionary, is right. We gonna put that. Keep text only. Take that away. A selfish and excessive desire for more of something than is needed. Notice that greed has no objective measure. Greed simply says, I want, I want, I want, I want, I want. Greed is never satisfied. Greed just wants to amass for the sake of amassing. Fulfillment, on the other hand, nope. Let's go find what the Merriam-Webster says about it. Fulfillment. That's not the one I'm looking for. What? No, 1 second. Fulfilling. No, that's not what I'm looking for. Examples. Nope. I don't mean fulfilling an order. No, that's not what I mean. 1 second. I think. Let's see. Okay, 1 second. Let's go back here. Right. So let's see. Merriam-Webster. Anyway, let's take this. The achievement of something desired, promised, or predicted. Or the meeting of a requirement, condition, or need. In essence, fulfillment has an objective standard. This is what I want. This is why I want it. I will know when I have it. So I'm striving to a predetermined destination as opposed to just on the treadmill of I want more for the sake of having more. Why is this important? I'm glad you asked. Because the human brain, again, talking about habits, is designed to function by something called the law of attraction. You probably heard several variants of it, like if you can conceive it, you can achieve it. If you put your mind to it, you can get it. You know, the concept here, right, is that you give your mind, your subconscious mind, a target, especially a noble target, and it will reach it. It will pull you in the direction of the subconscious reality you have held up as an end goal. That's the way the human mind was designed to work. Most religious books, like the Bible, even all the religions, you know, like Buddhism and the rest of them, they all share that basic tenet. When the human mind is given a noble task or a quest, it drives you in that direction. For instance, I made up my mind I was going to figure out how the markets work. And through the first 9 years of my trading career, first 8 years, sorry, of pain and loss, something kept driving me saying you can't quit now, because the journey you set out for yourself, you will fulfill. Greed simply says, I want more of this. I want more money. I don't care how I get it. I'm not concerned about what I'm going to do with it. I just want. If you come to the market with greed, it will kill you. Because everything about the markets are designed to prey on greed. Everything about the way a market maker works, your trading platform, the colors, the sounds, everything is designed to amplify greed, to cause you to make decisions that you will regret. And this ties in perfectly to number one, because when you have a clearly defined target, I want to get here for this reason, I will know when I am successful. It is easy to build, or easier to build, consistent habits in the pursuit of fulfillment. It is hard to build consistent habits in the pursuit of greed, because greed has no objective yardstick. Practically, how do I do this? Simple. Stop following cowboys and idiots whose Instagram and Twitter feeds are designed to get you to be greedy for a lifestyle that they themselves don't even have. They're renting the car, they're renting the house. I don't know a single trader, and I know many, who has been consistent over at least 5 years in the markets, who is making significant money that they're living by, who flaunts their wealth with greed. The real killers move in silence. Can I get a confirmation in the comment section? Real killers move in silence. Of the top 10 wealthiest men in the world who were not born into their wealth, not the ones who inherited it, the ones who created their wealth from scratch, very few of them, if any, flaunt it and live a greedy lifestyle. They're usually very simple individuals, because they are pursuing fulfillment, not greed. They have these, and fulfillment goes beyond money. Fulfillment could be, I want to be able to have more time to spend with my family without having to work a 9 to 5. You got it, Monica? Stealth mode. Stealth mode. So fulfillment could simply be, I want to be in control of my time so I can give back to my community. It could be, I want to have an extra source of income so I can be a philanthropist. It's usually something beyond money that is measurable. Or when I have $1 million in my bank account, I'm going to retire and then spend the rest of my life doing this. Whatever it is, there's a clear, definable target to it that usually has a noble goal. Greed is the opposite. Greed says, I want to get all I can and can it. The market will punish greed. They will reward fulfillment. All right, let's move. So number 3, which is pretty much the B part of number 1, is to develop a consistent approach to the markets. Now, this builds on the context or the concept of developing habits or prioritizing habits over results. It is hard to be consistent. Okay, let me write this down. It's hard to achieve consistency without developing consistency. Let me explain. Do you now with this I'm talking about technical stuff now. So now I'm talking about technicals, not just life behaviors. This is why so consistency in your results. Without developing consistency in your approach, do you have a consistent way in which you analyze, refine, and engage the market? This is why I keep shouting about the need for a trade plan. Many of you don't want to do the hard work of developing a trade plan, of writing it down, of going over it, of reminding yourself about it, and of holding yourself accountable to it. It's too much work for you. You just want to jump in the market, buy here, sell there, and make a bag. You will make a bag, your body bag, or the body bag of your account. I like that. I'm going to write that down. If all you are concerned with is making a bag, you will make one, a body bag. Meaning you will kill your account and probably your mental health in the process. Again, it comes back to the context of a habit loop. At Israel Keys World, you will learn. I should write that. Okay, let me put that out. A body bag for your account. Let's make it clear what I mean by that. You are going to learn so many different concepts that if you do not distill your own consistent approach, you will be even more confused than when you first began. Distill all the concepts you learn into a signature approach. This was what shifted for me 5 years ago. I developed my own signature, and I've taught some of you. You guys don't like the concept of the body bag. I'm going to leave it there because I want it to sting. I'm not taking that off the screen. I want it to sting. Yes, I want you to think of it so morbidly that you stay away from that mistake. Into a signature approach and stick to it. Knowledge can be a curse because you want to do every single thing you know how to do. I can trade at least 7 or 8 different ways. But which one is my signature? Which one vibes the best with my personality? Which one works well with my schedule? Which one fits the best into the rest of my life? And stick to it. Be consistent with it. When everybody else, for instance, my approach meant that last week I didn't get a single trade. And because I got into Friday morning well, Thursday night, the trades I entered were still moving around even. My approach says, unless you are willing to watch the market with a close eye on Friday, don't be in the market. If I'm trading on a Friday, I have a short leash because anything can happen. And so I closed my trades Thursday night for zero or tiny losses or tiny profits. And then on Friday, the move that I called all week, you guys saw it. It happened in one day on Friday, and I wasn't there to take advantage. That's fine. Because whatever I would have made this Friday, I will lose 10 times over the next few years on days where I am in the market on a Friday without being able to watch my trades closely, and the market maker takes me out consistently on a manipulation. But beyond that, do you like market structure breaks? Do you like engulfings? Are you looking for stop hunts to go in? Are you a Fibonacci trader? Are you a trend or counter trend trade? What all the concepts? Do you like fair value gaps or momentum gaps or order blocks or manipulation blocks or whatever? Just find a signature that says, when I open my chart, I look for this and that, and I do this and I do that, and I put my stop loss here and my take profit there. And it's consistent every time. Let me add to this. Stick with your approach. Through strings of losses. Every time you lose 2 trades, don't change it. Every approach will suffer losses. Others, signals. If everybody else says, oh, well, I really think, like, 1 second, let me. Kieran, permission to use the stuff you put in the the stuff you put in the Telegram group, because I found it real funny, because this is real life trouble. This is how a lot of people get in real trouble. Let's put this in here so everybody can see it. So this is how some people trade. We call it Chinese whispers. I've got a stock here that could really excel. Really excel, sell, 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 sell. And so everybody else, or someone here, some poor idiot here, feels under pressure because everybody is saying, this is why when we give signals in IKW, we don't say enter here, stop loss here, and exit there. No. We say this is the scenario, this is what we expect to do based on price action. Now the trade is ripe. You take that scenario as you see fit based on your signature. For one person, it could mean wait for the retracement to take an entry long. For another person, it could mean trade the drop into the retracement that will go long. And so the 2 people get the exact same picture of what's going to happen, and their signatures determine they do different things, and they both win. Don't be this guy. And then somebody says, I can't take this madness anymore. Goodbye, bye. It's just, it's just crazy, isn't it? Anyway, I found that funny. So stick with it through strings of losses, other signals, dry spells, and periods where it doesn't generate any trades. If your approach means that on a day where everybody else gets a trade, you don't, fine. Stick with it. Why? It comes back to the habit loop. It will, 1 second, let me put this here. The positive, or should I say the power of a positive habit loop will use a consistent approach to prevent you from making dumb mistakes driven by greed, or from pulling punches. To pull a punch means, it's a boxing term that means you're about to hit and then you stop yourself from hitting. In bracket, driven by fear. In essence, you will not enter trades you shouldn't have entered because you were too greedy, and you won't stay away from a trade you should have entered that will win because you were afraid. You follow your approach and you live with the consequences. Let me repeat. You follow your approach. If your approach says take that trade, you take it. If it says don't take it, you don't take it. And as you grow, you refine the approach. As you mature / gain experience, you refine that approach. So I told you, for instance, when I open a chart, the first thing I'm looking for is, what's the weekly chart saying? First thing. Second thing I'm looking for is, what's the daily bias? What was the last daily engulfing candle? The third thing I'm looking for is, if I'm trading a major, in fact, before I even do those first two, the first thing, actually, if I'm trading a major, what's the dollar index saying? Then what's the weekly chart saying in terms of its long-term direction? So I understand where I am in the long scheme of things. Thirdly, what's the daily bias? What's the last daily engulfing? I want to stick on that, in that direction, except I'm scalping. Number 4 is, I need a 4-hour stop hunt. So I don't do anything till price gets to an old 4-hour high or low and violates it and then comes back the other way. The 5th thing I'm looking for is, I want a market structure break on the 1-hour chart. Then I'm looking for a liquidity profile and a retracement back into the origin of the stop on the market structure break. Right? And then I'm looking for a 1-hour engulfing between 6 to 10 in London, 12 to 3 in London, or 5 to 7. In essence, London, New York, London open, New York open, London close. Does that make sense? Also, if it's an intraday trade, I'm looking for price to open. If I'm going long, if the daily bias is long, I'm not taking any entry above the daily open. I'm waiting for price to go below the daily open, preferably below the Asian range, and then give me an entry. If I'm going south, I'm expecting price to rise above the daily open, preferably above the Asian range, and then give me an entry. If it's an intra-week trade, I'm expecting the week to open up and then go the other direction first. If it's a long week, go south. If it's a short week, go north. In essence, if it's a buying week, first drop down into a sell position. If it's a selling week, first rise. So you see, there is a clear, consistent approach. I don't care about this indicator, that signal, this signal, what internet is saying. What I don't check other people's Instagram feeds or what their trades are doing. If there was a particular week where my approach does not generate a signal or gives me a loss, I am fine, because I know that over the course of weeks and months, on average, that my back testing and my years of experience have proven that this approach will be profitable in the long term. So my brain has a habit loop. So when a trade appears based off that approach, I can step in with confidence and take it. I'm not wondering, what if it loses? If it does, it does. Good, fine. Get on with my life. And this approach has been tailored to fit how my brain works, what my spatial recognition is. So I've picked concepts that I find easy to see in a chart. I taught you guys about fair value gaps and momentum gaps. My brain doesn't work well with them. My natural eyes don't clearly see fair value gaps or momentum gaps until after they have happened and passed. So that cannot be a part of my approach. I can teach you what they are, I can teach you to spot them, but in the pressure of the market, your brain may work with them better. Different people just gravitate to different patterns. But I can spot a manipulation block quicker than it forms, or just as quick as it forms. The moment it forms, I know that's a block there. That's a manipulation block right there. And so I do well with them. Find an approach, refine it as you mature, and stick with it. A consistent approach will help you measure correctly whether or not you are on the right track. How do you know if what you're doing is working if you do something else every day? How will you know what your problems are? What about your trading plan is causing you to lose? Well, if you have a different trading plan every day, you'll never figure it out. Hence, we say start with a demo. Be consistent with one approach and a demo, and then let it give you feedback on what you're doing right or wrong, and then adjust accordingly. I cannot stress that. If I were forced to give only one of these 5 today, this would be the one. By far, the most important one to my journey was this. Finding a consistent approach and sticking with it. And even if you are a trend line indicator trader, which I loathe, even if you have no idea about institutional order flow, there are people who are consistently profitable trading the wrong way because they do the wrong way the same way every day. Let me write that down. Doing the wrong thing the same way every day will give a higher chance of success, or shall I say, let's say profitability, than constantly switching between several ways of, or several versions of the right thing. Please chew on that for a second. Calm down. Find a consistent niche and work your niche. Your niche, whichever way you pronounce it. Your niche or your niche. All right. Number 4. You guys, are you following me? Is this benefiting you in any way? Right, number 4. This may sound counterintuitive. It will save your life. Believe me when I say it will save your life. Have a life away from the markets. In the early days, while you are learning, you want to spend a good amount of time, a good proportion of time, learning, practicing, and positively reaffirming your approach. But if all you do is stare at charts and draw lines and zones, your brain will crumble, one, under the pressure of repetitive stress disorder, doing the same thing over and over and over and over and over and over again with no breaks. But also, you will lack. One second. Let's put this down. Let's put this down. Right. Actually, nope. Not having a life outside trading will lead to number one, repetitive stress disorder. Just go Google it. Repetitive stress disorder. Secondly, emotional imbalance. Every young, and I don't mean age now, I mean in terms of how long you've been trading. Every young trader will do this at least once in your career of trading. And I pray for you, you do it. Like I say about a few things, there's several things every young trader will do at least once. My prayer for you is you do it on a demo account, not a live account. My prayer is that your once is on a demo. You will have a bad day or something will be going wrong in your life. And you will take a trade as a means of therapy. Now, if you have a life outside trading, it will only happen once. And I mean once in a bad way. And the feedback will keep you away from it for the rest of your trading life. But if you don't have any outlet for your emotions, you will emotionally trade. And you will blow your account. Because let me explain why you'll blow your account doing this. Let me explain. Remember, you took the trade because things were going bad. You wanted a win to make, it's like comfort eating, to make you feel better. And then when you lose, you feel worse. If you have a life outside trading, that feedback loop cuts off right there. I took that trade to feel better. I've now lost 1% of my account. I'm not going to trade for another day or so while I get myself under control. If you have no life outside trading, guess what you're going to do? Take another one. Or, well, I'll win this next one, then I'll feel better. 10, 15, 20 trades in a stupidly short amount of time later. And usually you will start doing stuff like, well, I lost 1% on that one. If I risk 2% on this one, I'll make back double what I lost. And you will keep moving your stop loss. You will keep increasing your lot size and your risk size, and or taking more and more trades until you get the dreaded margin call. The margin call is a notification from your broker that you need to put more money into your account before they'll let you stay in your current trades or open anymore. The broker is saying the rate at which you're losing, you're going to lose us more money than you've put in, because we're borrowing you money based on leverage. And then they will close all your trades. And this is how market addicts are born. People who cannot not trade, even though people who've blown several accounts, they've blown their life savings. They begin. I know people. Well, I don't know them personally, but I've heard about people who actually steal just to be able to trade. It's like a habit, like a drug addict, like a drug habit. Sorry, they just have to trade because that's their only source of joy. Get a life. Get a life. Get a hobby. Let me put this here. Get a life. Find a hobby outside the markets. having a life slash interests, even if you're a full-time trader. It's quiet in the comment section. Come on, talk to me. Interest outside the market will help you approach them with a degree of balance. Will help you. 1 second. One, approach them with a degree of balance. Allow you take breaks to rest, refresh your mind. Give you fresh eyes to see where you are going wrong slash avoid mistakes. I'm not going to go into too much time for this one. We'll come back to it later in your course for those registered students, but please, please, please have a life outside the market. I can't stress how much that is. I just cannot. And this goes for any pursuit in your life, any career, anything you're passionate about. This should, also let me throw this here. Don't use trading as a substitute for quality relationships. Don't. The market's not your wife. It's not your child. It's not your best friend. Hello, it doesn't love you. Let me help you out. Right? The market does not love you. Buy a pet. Visit your mom or dad. Take your children out. Invest in quality human slash, even if it's animal relationships, wholesome relationships. Trading can destroy quality relationships without balance. Monica, let's put that up there. The market don't love you. No, sir. The market does not love you. In fact, I'm going to type that in this. Market does not love you, and certainly does not owe you. So do not develop a dependent relationship on it or with it. Do not develop a dependent relationship with it, especially not for emotional fulfillment and or affirmation. If you find yourself depending on trading to make you feel good about yourself, please take a break or talk to a mentor. And most mentors will recommend that you do take a break. If your sense of esteem is tied to your results or just to the feeling of trading, honey, you are no different than someone who should be attending an Alcoholics Anonymous meeting. Monica, you don't want to know how many traders have blown their accounts simply because they were so sure the market owed them. Let me add this here. It's okay to be wrong. Don't tie let me see now. How do you spell this tie? There's different spellings of tie. Don't tie your sense of value or proficiency to the result of a trade / analysis. You don't need, you don't, oh well, if I got that wrong, there's something wrong with me, I'm no good, I'm no use. These are all symptoms of an individual who doesn't have a life away from the markets. Yep, Monica, yeah, that's how it works. It's exactly how it works. Numero quintos or cinco. Numero cinco. Number 5. Treat it as a career. Stop trying to overspeed the process. It will take as long as it will take. Can't stress that enough. How long is it going to take you to become a successful, to become a proficient, self-reliant trader, or should I say independent trader? I don't know. Everyone's different. It'll take as long as it will take. You wouldn't trust, or should I say, you wouldn't try to perform open heart surgery after 3 months of med school. And then I asked a question, right? Because if you would, then let me know what your name is so I can call the medical association of whatever country you're in and tell them never to admit you on the register. Play the long game. Give yourself space and time to grow and don't be hard on yourself prematurely. The only thing you should be hard on yourself about is being indisciplined with following an approach. If you have bad habits where you do things you know you shouldn't do, then yes, do smack yourself upside the head. But everything else, give yourself time to figure stuff out. Impatience will sabotage your emotional balance and create dysfunctional habit loops. And this here is the gospel truth. Pace yourself, right? But also be disciplined, positively ambitious, and goal driven, just like any other career. I want to get there after so long. I'm going to be disciplined. I'm going to be ambitious. and I'm going to be driven for it because it's a marathon, not a sprint. Right. I am going to end tonight here. We've been going for about an hour, and well, if you count the beginning, the intro, at least about an hour and 20 minutes, so 80 minutes roughly. I think this is long enough for you to get a gist. So let's go over this one again. Let's go over these again real quick. How do you find consistency in your trading? Well, first of all, let's define consistency. It's being able to predict with some accuracy a minimum threshold of success. It means you're not hoping to succeed, but you have a clear and sustainable edge. So you're not gambling. Let me go back and add that. You're not gambling. You're not hoping. You know that what you're doing works. You're even killed in your results and not prone to wild swings of profits versus drawdown. Well, the main reason it's so important to hit the threshold of consistency early is if you don't, it'll drain you emotionally and damage your approach to the markets. It'll amplify the pain/pleasure and fear/greed cycles and develop negative habit loops. All right, let's keep going. Avoid emotional treadmill and stay away from traders' bipolar syndrome. So, 5 keys. 1, focus on habits, not results. See, I say you can read that real quick. So, too many traders have no habits are very bad ones. Habits are clear, definable, and repeated actions/attitudes to a thing. Habits usually are birthed from a philosophy and or a paradigm of life for a certain part of it. The human brain is wired to enter and sustain habit loops. So, create positive habit loops that make trading easy. Stay away from negative ones that make it painful. Focus on results instead of focusing on results instead of habits. Instead of habits, create a dysfunctional cadence of the end justifies the means. Consistent habits will breed consistent results, not the other way around. Kill the drive of greed and replace with fulfillment. We learn to trade to develop a skill with a financial benefit, but there's a difference between a desire to make money and greed. Greed is a selfish and excessive desire for more. It has no objective measurement. Fulfillment is the achievement of something desired, promised, or predicted, the meaning of a requirement, condition, or need. It's driven by measurable, predetermined yardsticks and KPIs, key performance indicators. Number 3, develop a consistent approach to the markets. You can't be consistent in your results if you're not consistent in your approach. Some of you were a bit scared by this, but if all you're concerned with is making a bag, you'll make a buddy bag for your account. You'll kill your account. So distill all the concepts you learn into a signature approach and stick to it. Stick through strings of losses. Ignore other people's signals while you're developing your approach. Stick to it through dry spells and periods where it doesn't generate any trades. The power of a positive habit loop will use a consistent approach to prevent you from making dumb mistakes driven by greed or from pulling your punches, meaning not taking trades you should take driven by fear. As you mature, gain experience, you refine that approach, and it will help you measure correctly whether or not you're on the right track. Doing the wrong thing the same way every day will give a higher chance of profitability than constantly switching between several versions of the right thing. Even if you don't understand the way the markets work, but if you find a consistent approach that works, it's better than somebody who understands how the market works and can't find a consistent approach and keeps changing things every day. Number 4, have a life away from the market. Avoid repetitive stress disorder from doing one thing too often without breaks. Avoid emotional imbalance, and definitely avoid emotional trading, meaning you take trades because you feel sad. You don't have anything else in your life to keep you even keeled or give you joy or fulfillment. Get a life. Find a hobby outside the market. Having a life or interest outside will help you approach the market with a degree of balance. You can take breaks to rest to refresh your mind, and breaks could be hours, days, or weeks. In my case, sometimes it's months. I take at least 1 month at the start and end of every year away from the markets. It'll give you fresh eyes to see where you're going wrong and avoid mistakes. Don't use trading as a substitute for quality relationships. It can destroy your quality relationships if you don't do it with balance. The market don't love you, and it certainly does not owe you. Do not develop a dependent relationship with it, especially not seeking emotional fulfillment and or affirmation. It's okay to be wrong. Don't tie your sense of value or proficiency to the results. To the result of a trade or analysis. And these are all things that will easily happen if you do not have a life away from the markets. Treat trading as a career. Be in it for the long haul. Stop trying to overspeed the process. It'll take as long as it will take. Don't try and become a surgeon after 3 months of med school. Don't expect to be perfect after 3 weeks of demo trading. Play the long game. Give yourself space and time to grow. Don't be hard on yourself prematurely. Impatience will sabotage your emotional balance and create dysfunctional habit loops. So stop being impatient. You will do better if you are slower, or at least you allow yourself take your natural pace. If you try and overspeed the process, the pain of losing or mistakes will fry your emotions. Be disciplined, be positively ambitious and goal-driven, just like any other career. Remember, it's a marathon, not a sprint. All right, guys, I am going to leave it there because it's the Traders Lounge. It's not a class. I'm not going to ask for questions because, yeah. Or should I? No, not tonight. Not tonight. Let's leave it there. Students, you can ask questions in the Telegram groups and channels and groups about anything you learned tonight you need more clarity on. Everybody else, if you are a student, the question is, why wouldn't you want to register for $79.99 a month for all of this? Just look at that you get all that for the price, for some of you, of 2 dinner dates, and for some of us 1 dinner date. When you sign up, you get a weekly schedule that looks something like this. You don't have to be at every single session. They're all recorded, and you can watch them and engage with them on demand. Not all of them are public. Some of them are behind closed doors. Some of them will run on YouTube. Some will run on private YouTube videos that only the people with access to them can find. Some of them are in Zoom, where we can interact, ask questions, and work with each other's charts and screen share. So I hope that you have learned something today that will be a foundational piece of your success in the markets. On behalf of everybody here at Digital Keys Wealth Academy, have a great week. We will see you tomorrow, 9:15 in the evening, with Talkware for the first analysis session of the week. Take care. Have a great week. Have a life outside the markets. Enjoy quality relationships. And all the best in your trading career. Bye-bye.